Welcome back to the Deep Dive. Today, we're diving into something that's really catching a lot of eyes lately, gold. Specifically, its pretty undeniable resurgence as a go-to asset. When the economic waters get a bit choppy, people look for solid ground, and gold. It's definitely shining right now. Our whole chat today is sparked by this really interesting article, Gold Shines as Investors Seek Safety Amid Turmoil. It's by Doug Young, published just June 29, 2025. So our mission here is to really unpack why gold's getting this much attention now. What's its history in times like these? And, well, what makes it so different? Okay, let's unpack this.
And it's such a timely discussion. The global economic picture, well, it's full of uncertainty, isn't it? You're seeing investors everywhere, really, from individuals right up to, national treasuries looking hard for stability, searching for assets that can ride out the storm when the usual markets feel, well, increasingly unpredictable.
Absolutely. And the article digs into some very immediate reasons for that concern. In 2025, we're seeing the real impact of geopolitical tensions heating up. Stuff like trade disputes flaring again, talk of new tariffs, plus various conflicts simmering around the world. That injects a lot of volatility, right?
Significant volatility.
But it's not just that, is it? We're also dealing with inflation that just won't quit. And global debt levels, they're just, well, ballooning.
Yeah, astronomical figures.
Add to that maybe a bit of diminishing trust in central banks, maybe governments too. And you've got a recipe for some real economic fragility.
What's fascinating here, though, is how these pressures are hitting what we, used to think of as the safe bets. Stocks, bonds, they're facing headwinds. You've got stretched valuations, interest rates doing unpredictable things.
Right.
Even real estate, which was hot for so long, seems to be cooling off quite a bit in many places. So it's not just a small adjustment. These things are making investors really rethink their whole strategy. They're asking, are the old playbooks actually giving us the safety we need anymore?
And this isn't exactly new territory for gold when things get rough, is it? Here's where it gets really interesting looking back. The article highlights gold's pretty amazing track record. Think about the 1970s stagflation. You had slow growth, crazy high inflation, and gold just soared.
It's really outperformed then.
Yeah. Or 1987, Black Monday, the stock market crash. Gold acted as a buffer. Then the 2008 financial crisis. It helped preserve capital when, stocks just tanked.
A key moment.
And even very recently, the COVID-19 panic in 2020. Amid all that chaos, gold offered some stability. It just seemed to step up when the economy's under stress, almost like a constant.
And if we connect this to the bigger picture, the lesson isn't just that gold survives these crises. It's that it often thrives precisely because it doesn't play by the same rules as other assets.
How so?
Well, think about it. A stock's value depends on how well a company does, its earnings, right?
Right.
A bond depends on the government or issuer paying it back, their solvency. Gold doesn't rely on any of that. Its value is sort of intrinsic. It's not based on someone else's promise. Combine that inherent value with the fact that it's highly liquid, easy to buy and sell. It makes it a pretty unique store of wealth, especially when trust in those other systems starts to wobble. That independence is powerful.
And it seems like it's not just individual investors noticing this. The article points out a really significant trend. Global central banks buying gold like never before. We're talking over 1,000 tons a year recently. That's huge.
It is huge, and it begs the question, doesn't it? What does it mean when the world's central banks are flocking to gold? What we're seeing is a major strategic shift. It's often linked to this idea of de-dollarization.
Right. Moving away from the dollar a bit.
Exactly. Countries are actively trying to diversify their reserves, not be so reliant on the U.S. dollar. They see gold as a hedge, not just against currency fluctuations, but also against those bigger geopolitical risks we mentioned.
Hedging their bets, essentially.
It's a calculated move, yeah. Bolstering their own financial stability and independence in a world that feels, well, pretty unpredictable.
Okay, so central banks are in. It's got this strong history. What is it about gold itself, the actual metal, that makes it so unique? What are its fundamental properties?
That's really the core of it, isn't it? Well, first off, a huge one. No counterparty risk or expiration. Meaning its value doesn't depend on whether a bank stays solvent or a government honors its debts. Unlike a bond or even cash in a bank, with gold, you hold the actual value. There's no middleman, no promise that could be broken. That's a massive safeguard against, systemic financial meltdowns.
Okay, so it's not an IOU. It is the value.
That's a big difference.
A fundamental difference. And linked to that is its liquidity and universal acceptance. Gold is recognized and traded everywhere. all over the world.
Hmm.
You can buy it, sell it, move it across borders relatively easily. That gives investors flexibility, access, even if things go sour locally.
Like a universal backup currency, almost. And wasn't there something about demand, too? Yes, exactly. The third point is its dual demand. It's sought after for investment, bars, coins, ETFs, but also for consumer uses. Think jewelry, electronics.
Yeah.
There's this constant underlying demand from industry and consumers.
So it's not just investors pushing the price.
Right. That broad base of demand helps support its value over the long term. It's not purely speculative. These characteristics together are really what give gold its enduring appeal for preserving wealth.
Okay, so wrapping this up, what does this all mean for you, our listener? It seems pretty clear that gold's age-old appeal as a way to preserve wealth is, well, very much alive and kicking amidst all these current challenges. Now, before we finish, it is really crucial. We mentioned the disclaimer from the article itself. It says, this article is for informational purposes only and does not constitute financial advice. Please consult a licensed professional before making investment decisions. Our aim here today was just to pull out the insights from that source, to understand the why behind the trend, definitely not to give any financial guidance.
Absolutely. And perhaps this leaves you with an important question to think about. Given gold's history, its reliability in tough times, and its current prominence, what might its growing appeal tell us about where global financial stability is heading? And maybe more personally, how might these big shifts influence your approach to financial planning in a world seemingly valuing tangible assets more and more? Something to ponder.